let's start off this daily financial news with a suggestion for maybe a weekend podcast listen. I strongly recommend, if you find the time, to listen to Howard Lutnick's interview discussion podcast on the All In podcast. I believe Howard Lutnick's 60 or so minute discussion with Chamath and David is perhaps, no, not even perhaps, it is the most impactful podcast I have ever heard. We should all hope that what Howard Lutnick puts out there is what happens. It ends with a balanced budget. Again, the net of it is, there's all kinds of stuff in there, but the net of it is we're going to find $1 trillion of waste, fraud, and abuse. I can't imagine any of us are against finding waste, fraud, and abuse. And then on the other side, we are going to find a way to raise $1 trillion. If we can do both those things, a couple of things happen. One, we can slowly work off the deficit. And two, and this is what matters for a real estate channel, interest rates will crash. I will say that again. If what I heard on Howard Lutnick's podcast, on the All In podcast, happens, rates will crash. And the beauty about this is they don't even have to get to $2 trillion in net savings, right? $1 trillion in savings and a new $1 trillion in revenue. They just have to get on the path. If the bond market starts to believe that it is possible to find $1 trillion in waste, fraud, and abuse and raise $1 trillion in new revenue service, interest rates will crash. It's just simple. So lots of other stuff to talk about today, but that is a highly recommended podcast. In fact, I might listen to it a second time just to make sure I got all the subtleties. Next week is a big week for economic data. It starts off hot Monday morning. Monday morning, we're going to get a sneak peek at the service sector and the manufacturing sector with S&P Flash services and Flash manufacturing. Both are actually expected to be positive. Again, on these reports, anything above 50 is good, below 50 is bad. Both are expected to come in at 51.5, so they're growing. Tuesday, we will get Case-Shiller home price. It will be for January, so the first month of 2025, and shockingly enough, prices are expected to be up, or values are expected to be up 4.4%, so certainly not crashing. We will also get consumer confidence, which is an important thing. Again, I do think over the next 60 to 90 days, it is all about the consumer. It's certainly also about small business. It's about people who have that at the margin, whether they're conserving, investing, spending. Because again, I think there's a lot of noise, a lot of fear, a lot of uncertainty in the system. So all consumer confidence, all small business metrics, we're going to have to pay attention to. We also get new home sales. Again, we'll have more from Lennar in a minute, but Lennar took a big hit on margins. Again, pace over profit. Wednesday, we'll get durable goods. Durable goods, again, for your reminder, are those things that are expected to last 3 years or longer. Durable goods are expected to be down -1%. So again, that's really where I think consumers cut, right? Consumers cut, businesses cut. If they're uncertain, they're not going to make those bigger investments, those bigger purchases on durable goods. We'll get that on Wednesday. Thursday, we will get weekly claims. We will get pending home sales. Pending home sales are actually expected to be up. So that will be interesting because, again, rates have been down. So we'll see if pending home sales are up. Last month, pending home sales were down 4.6%. So we will see where we go from there. But Friday is the big day. Friday, we will get PCE, the third and final inflation reading. It's going to be really important. And I fear we might be higher than expected. Headline PCE is expected to stay flat at 2.5. I think there's a chance we go to 2.6. And then core is expected to come in at 2.7, which is up up from the previous month. You don't want to see that. But there's also a chance it might tick to 2.8, which would be a problem. And then finally, we will get consumer sentiment on Friday. So lots of stuff going on there. What else do we want to talk about? Let's talk about we got some earnings. Micron beat top line, bottom line, raised guidance. These are all from Friday. Again, I don't record normally on Friday, so that's a Friday number. Nike was an important earnings. Nike expects sales to plunge on tariffs and sliding consumer confidence. Accenture is the first corporate casualty of Doge. They basically warned that they expect contracts to be cut. Again, you'll hear a little bit about that on the All In podcast. I think it was Booz Allen. They got like 98% of their business from the federal government. That's not very good risk management, in my opinion. But yeah, it's interesting. We also got FedEx. FedEx cut full year results with forecast and uncertainty in the economy. Let's do something real quick. Let's congratulate Matt. Matt, you got your next deal. I think it was your fourth deal, so congratulations. Your card is in the mail. You actually sent me a note while I was out traveling. So first time I remembered to do it. So Matt, your card will be in the mail. We did get an update on charge-offs, consumer credit card charge-offs. Lots of people are making noise about this, but again, I think there's a deeper story there. What is happening? Capital One, 6.35% charge-offs, highest in 13 years. Discover, 6.03%, highest in 11 years. Just so you know, going into 2022, it was 1.5%. So again, this is the same old story that the doomers are missing. We had a 2 or 3 year period where we held charge-offs artificially low. Again, when you hold something artificially low and then it breaks, it goes higher. This should not shock anyone, but the doomers will never forget, and they just want to spread fear. Boston Celtics were sold for a record $6.1 billion. That is a record for a U.S. sports team. $6.1 billion to own the Boston Celtics. Wow. JP Morgan says that U.S. households are more invested in stocks than any time before. I think that's kind of a no duh, right? As years go by, values go up, the investment continues. John Burns Real Estate Consulting out with a very interesting survey, says that greater than 50% of respondents said the spring market is weaker than normal. Folks, this is what we've been talking about on this channel. Consumers are pulling back. They're not signing up for mortgages. Again, why would you if you're uncertain? But again, as investors, you and I, that's a green light. It's a green light to seek motivated sellers, to write disrespectful offers, to get creative with seller financing, to try the 50-40-10 with Velocity Mortgage. It is our opportunity to find these sellers who need to sell. A little bit more on existing home sales that came out on Thursday morning. I dug into them a little bit more. Again, I was wrong. I expected sub 4. They came in at 4.26. So again, a big upside. Inventory's up 17% year on year. Price up to $398, up almost 4%. The thing that was buried in the numbers that we didn't talk about on Thursday is sales were only higher in the category of $750K or greater. This just screams and once again reminds us that the housing market is very much still broken. We should not see the low end continue to shrink while the high end continues to grow. That is a broken housing market for sure. In fact, sales around the median price were down 3%. So this is what I keep trying to tell you. I think the median price is being yanked higher because of the mix, the product mix. If you sell less of the low end and you sell more of the high end, the price gets yanked higher. This is how it works. First-time home buyers had a big jump, 31% of market. They were 26 last year. Investors We all sat back on our hands. Investors were 16%, where we were 21% the year before. We can talk about Lennar a little bit. Again, pace over profit. We saw it in this quarter's earnings. Their profit, or their gross margin, shrank to the lowest in several years, to 18.7%. For context, it was 26.9% in 2022. So we're talking a significant beat. 13%. Woo! 13% of Q1 had sales incentives. That's a big haircut. They're giving out buy down in points, maybe some free upgrades. Again, pace over profit means margins are going to get hit. The housing market will remain weaker for longer, says the CEO of Lennar, to which I say, no kidding. Consumers are less confident. They will remain employed. That is not a good thing. If you are nervous for your job, you are not signing up for a mortgage. They are laser focused on high sales volume to build cash. That is a very interesting statement. What does that mean? That means they are trying to convert their inventory, right, their finished goods, to cash, which also probably means they're going to slow down development because they want to have more cash. So again, it'll be very interesting to see what the home builders do. Related Group CEO warns construction costs are up 20%. How can that be? Very simple. Contractors are raising prices in advance to offset potential tariffs. Folks, inflation, inflation, inflation. Read an article about the 5 countries that expats are moving to abroad. I've actually been to all 5 of these. So let me know what your favorite one is. Panama, Malaysia, Mexico, France, and Spain. 2 more topics. We'll go to Jeff Gundlach first. Jeff Gundlach says there's a greater than 50% chance of a recession in the next 2 quarters. You got to agree with them, right? With all we're hearing about the consumer and everything going on there, it is getting dicey out there. And then finally, folks, I do want to remind you, in about 17 minutes, I will be going live in our school platform. Just a Zoom call with all of you to answer any and all questions, real estate, economy, travel, family, health, whatever you want. I'll be there for you. But I did want you to know that I just launched a school affiliate program. As you guys know, my school program is ridiculously cheap at $20. What I've done now is allowed you to invite your friends. And if your friends join, you make $8. So all you have to do is invite 3 friends that join, and your school community is free. Now, why did I do this? I did this because I believe our school community is different, because it is made up of a collection of all of us inviting other people that we know that are doing the work, that want to be together. So I see no reason why not to give out $8 of the 20 to folks that find other good people. Again, only invite good people. Don't chase $8 with inviting haters. We don't need any haters in the group. So folks, I hope to see you there. Hope to see you inside school. Again, 67 cents a day. Hope you enjoyed this daily financial news. Take care. Have a great, great Sunday. Bye.